Howdy everybody, I'm Gary and this is GLoPersonalFinance, where I talk about getting your finances under control, building wealth, and becoming financially independent. Buying a house, one of the biggest purchases a person can make. Hopefully you caught my last video on considering all the financial factors when buying a house. If you haven't watched it, it's linked right up here. So now that you considered all the financial factors and you decided that you want to buy a house, it's not like walking into Target and throwing down $500 and getting the latest PlayStation 5. That's like 2 steps: pay money and get PlayStation. It seems like a lot, but I'll list out the 7 main things you have to do to buy a house. And seriously, it's like 30 things altogether once you add in a good amount of the minutia that you gotta do. But I've whittled it down to 7 main things you have to do when buying that house. Stick around and we'll go through the buying process together. First off, hit me up by smashing that like button. These videos take a good amount of time to research and compile and edit together, and hitting that like button really pushes the YouTube algorithm to recommend my video to other people. So yeah, buying a house, it's such a daunting task to undertake. So here's the first thing that you gotta do to buy that house. Number 1, get pre-qualified to purchase a home. Research out a few lenders and get pre-qualified. Getting pre-qualified by that lender doesn't mean you necessarily need to use that lender, but what it does is give you that rough estimate on how much house you're able to purchase. Some lenders will do a hard pull on your credit, but if you do many hard pulls on your credit within 2 weeks, the credit agencies will only register it as one hard pull because they know you're shopping around to different lenders. They will look up your credit score, income, debt, and give you a rough estimate of what you are able to afford. Try and get that credit score as high as possible. Try and have minimal debt like credit cards, student loans, or car debt, and that'll give you a higher pre-qualification estimate. Going to a house and the seller knowing you're pre-qualified helps the seller know you're serious about getting that house and that you're ready to jump on the opportunity. That, however, brings me to my next item, number 2, affordability of the home. Sure, you got pre-qualified, and I can assure you, most lenders have overshot that estimate. Sure, you might be qualified to buy this house at this price, but can you afford this house at this price? Obviously, this answer can be only answered by you, but I've dealt with so many people that get that pre-qualification letter and they make a beeline to Zillow or Redfin looking for that house near the limit of what their pre-qualification letter wrote. You have to familiarize yourself deeply with the amortization schedule so you can see how much you're able to be paying every month. What does a few percentage points in your interest do to your overall numbers? And also considering all the hidden costs of owning a home. Remember, that pre-qualification letter is just a rough estimate of what the lender thinks is in your price range. So yes, that pre-qualification letter is important, but you still have a bunch of homework to do making sure you can afford this house. Can you afford that down payment? How much are you going to be putting down? It can range between 3 and 20%. If you're putting anything down below 20%, that lender will tack on PMI, private mortgage insurance. This is not insurance for you. This is insurance for your bank in case you miss out on payments. So you're paying for the bank's protection. And if you're only putting a down payment closer to 3%, you'll be getting something called an FHA loan, which the lender will see you as a riskier investment. So not only will you have to pay the PMI insurance, you'll also have to pay a higher interest rate. So are you able to afford the monthly payments depending on how much you put down? You want to make sure that your housing payments are at least less than 1/3 of your take-home pay. And finally, closing costs. Can you afford the closing costs? Those costs are usually between 2 to 4% of the total purchase price. Affordability and costs are such a huge part of buying a house. Don't just jump into it willy-nilly. You gotta study to make sure that you can afford that house. Number 3, get a real estate agent. They have the insight to find your specific criteria in a house. They've most likely had tons of clients and know how to read the lay of the land to match your personality with that property. But having a good buyer's agent via word of mouth is definitely a good thing. I'm not sponsored by Redfin in any way, but I've heard from many friends that they had an amazing experience with a Redfin affiliated agent, and their fees are way lower than a traditional agent. So that might be a route to research. Although I personally have no experience with that, I have heard good things through friends. Number 4 is know what you want. There are a ton of things to consider, and you should really communicate that with your real estate agent. I know we want that biggest and newest house, the best neighborhoods, the best schools, and lowest crime rate. But with anything in the market, it comes at a price. There are nooks in every place that you can find the best criteria. I love going on Redfin and Zillow and see what the market is around the area. I love looking at citydata.com and researching the areas I want to buy so I can see the stats of the region. My wife and I made an Olympic sport to go to as many open houses as possible so we can see the house and location. Go to that location at night and also get a feel of that place. This information is crucial so you know you're making the best decision for your well-being. This information needs to be communicated with your agent. They have inventory that Zillow and Redfin don't have, so keep in close contact with them. And number 5, making an offer. So it all depends on what kind of market you're in. Are you in a buyer's market or a seller's market? A buyer's market is when there are too many houses but not enough buyers. So buyers have a bit more buying power. They might be able to ask for lower than asking price from the seller. But if you're in a seller's market, that means housing is hot, not enough inventory for the amount of buyers that are out there. So you have to pay for asking price or more to get the house that you want. Your real estate agent should be able to help you out here. They've done many deals and know the market well. They should be able to give you a rough estimate of what's going on. And number 6 is your EMD, your earnest money deposit. The amount of money for your deposit varies from state to state and from person to person. This deposit is to show the seller you really are serious about getting that house. And if for some reason you're at the day of your closing and somehow don't want the house anymore, you will not get your deposit back. So only give your deposit if you are set on getting that house. There are times where you are able to pull out from that deal and get your EMD back. There are 3 specific times where you are able to pull out that deal and get your EMD back. These 3 things are called contingencies. If any of these 3 contingencies fall through, you can pull out of your deal and get your EMD back. However, if you're in a seller's market and you want to make your offer more appealing, you can tell the seller you're willing to give up 1 or more of these contingencies to make the seller choose you. So first, you have your home inspection contingency. I really recommend you don't give up this contingency. You're able to hire a home inspector to go through the house to make sure everything is in tip-top shape before buying that house. If there is anything significant, you can pull out of that deal and ask the seller to repair before proceeding with that deal. The second is the appraisal contingency. When you get the house appraised, there could be 3 scenarios. Scenario 1, the house value appraises for the price offer. Or scenario 2, the house value appraises for more than the price offered. Both of these are great for you. If the appraisal comes back as what you've offered, then you know you're paying fair market price. If it comes back for more than you offered, then you're getting a house worth more than what you're paying for. However, if the house comes back appraised for less than what you offered, the bank will only lend you the money on the appraised value of the property. And if that happens, you'll have to come up with the remaining cash to meet the offered price. And if you give up that appraisal contingency and you can't come up with the difference in price, you will lose that EMD. And the third is the loan contingency. The loan underwriting process is a huge undertaking. Your lender will ask you for so many documents. Do a deep dive in your credit history and do a deep dive in your work history. The lender wants to know how risky you are and the worth of the property they're funding. There are times people get denied for a loan, and if you're one of them and you don't give up this contingency, you'll have to pull out of the deal and not get your EMD back. So yeah, when I got my home, it was a pretty hot seller's market. We knew we didn't want to give up the home inspection contingency, but my wife and I gave up our appraisal contingency and our loan contingency to make ourselves a little bit more marketable. There were times during the appraisal process and loan process that made us sweat some pretty serious bullets because of the risk, but thankfully it all worked out. And the very last thing, number 7, is closing on your home. There's actually a good amount of time between the EMD and closing on your house. The lender will be asking for a ton of information like I said before, so be ready to pony up this information as soon as possible to get things moving right along. After the loan is finally approved, you can get to the closing on your house. So now you got to get your signing hand ready because you're going to be signing a ton of papers. After that, the house should be yours. This process is such a huge process. It's seriously a good 30 things you gotta do, but hopefully I've summarized it down to the key 7 things to expect when buying that house. Every situation is different. From our house, it took a good 48 days from getting a real estate agent to closing on that house. So definitely expect a pretty drawn out process. I hope y'all like this info. Please do like and subscribe to my channel. It does take a good amount of time to research to bring this information to you. Y'all stay safe out there and I'll see y'all next time.